think the important piece in all of this is New Zealand's favourite asset, which is housing. And from our point of view, we see house prices rising 5 to 7% next year.
Wealth HQ, empowering you to take charge of your financial life.
For the second time in the space of 7 weeks, the Reserve Bank has dropped the official cash rate by 50 basis points. So what does this mean for 2025? Well, we're joined by Kiwi Bank Chief Economist Jarrod Kerr. Jarrod is a respected figure in New Zealand's financial sector, known for his insightful analysis of economic trends and monetary policy. He has been at the forefront of interpreting the Reserve Bank's decisions and their impact in the country's economy. With his extensive experience and keen understanding of the financial markets, Jarrod provides valuable perspectives on New Zealand's economic landscape. So Jarrod, what are your thoughts on this latest cut?
Oh, it's good news. It really is good news. We've seen 125 basis points of cuts, and mortgage rates have fallen by a similar amount. That's feeding through to households who've been struggling with high interest rates, high inflation, and a whole lot of issues in recent times. So it's good news for households, but it's also really good news for Kiwi businesses. The backbone of the economy. They're getting lower interest rates. They're getting relief at a time when it's really needed.
Yeah, I mean, the business owners is what is going to drive the economy. I've seen unemployment rates are still, there's still issues there. There's a lot of people sitting on the couch voluntarily and involuntarily. So it's interesting to see if the business owners do get their confidence back. They're going to start borrowing money and start investing into things where they need to hire more people. You must have insights on small business lending and the debt levels. What are you guys seeing there?
Yeah, it's really interesting. So I get to do a whole lot of presentations to a whole lot of businesses, right around the country. It's a real privilege and it's a lot of fun. Had I given a presentation in June, July, businesses would have come up to me afterwards and said, look, we appreciate the optimistic view and thoughts of rate cuts, but here's all the problems that I'm facing and here's what I'm going through. It was a real survive till 25 type mentality. Since the Reserve Bank started cutting in August, they've lifted their heads. They really have. And they're looking to next year with a lot more optimism, knowing that rates are being cut and they're being cut quite aggressively. They're getting relief on that side. And we're also hearing that general inflation and cost pressure is coming off as well. So hopefully profitability, starts getting restored into next year. And then to your point, it's the big point. When do they start investing again? When do they start hiring again? I do think that's a story for 2025.
Yeah. With certainly see you guys are predicting that interest rates will keep falling. And with lower interest rates, it does encourage more borrowing. So I do note that there's concern around debt levels and certainly the KiwiSaver withdrawals. So maybe that's at the ends of the bell curve and maybe the middle part's confident. But no, what are you guys seeing that's troubling you?
Yeah, I mean, we've been in recession for 2 years, right? We can't hide from that fact, and unemployment is rising, as you say, as a consequence of being in a recession for so long. So businesses, most businesses I talk to are more in the lines of downsizing their workforce. That'll hopefully turn around over the next year, but that's where the rubber hits the road. Is the unemployment rate really, and to combat that, you've got to get the economy firing again, and the only way you really do that from a central bank's perspective is to cut the cash rate right back down to a more neutral setting, so it's no longer hurting people. At 5.5, the cash rate really hurt, and it did a lot of damage. It's now at 4.25. We think it's going to be at 3. And that move will provide, I think, enough relief to get us back on track.
Yeah, well, certainly indication that there'll be another big cut in February. And it seems that there was encouragement for a bigger cut this time around, and a lot of argument for it. From the outside looking in, it looks like the Reserve Bank has doubled their headcount, going from 300 staff to 600 staff over the last few years, and they've become distracted with so many different things. If they really want the economy to get back to a better place, it seems weird that they haven't cut in a bigger fashion this time around.
Yeah, I mean, from their perspective, 50 is a pretty big cut, considering they delivered 50 in October and then again in November, and they're telling us they're going to do another 50 in February. That, from their point of view, 150 basis points in 3 meetings is pretty punchy and pretty assertive. It's not sort of 75, 100, 150 that we get during really severe downturns like the 2008 crisis or COVID, where they cut by 75. So they're not in an emergency state, but they are, I think, cutting quite assertively.
Yeah. I mean, you can argue either way, right? And or saw some notes from your team around that the market was making bets that the cut would be bigger. Certainly seemed like a couple of weeks ago there was more people saying it would be a bigger cut, and then it kind of people tempered that.
Yeah, so it was interesting. It was an international bank that came out and said that the Reserve Bank is or should cut 75, and then a few international traders, hedge funds, got on board that call and started taking bets in the market. The local commentators, you'll note, were all calling for 50. The local banks were all positioned for 50. These foreigners play around, but they got stopped out on that trade.
Yep. And so if we look internationally at what's going on in the world, New Zealand is more of a price taker rather than a price maker when it comes to all these things. Certainly been a lot of talk about Trump coming into power and tariffs, and so how do you think what's going on that side of the world is going to impact us?
So there's a lot going on. There really is a lot going on. Our number one trading partner, China, is struggling to grow at the rate that they want to grow at. They've had a very, very bad crisis in their property market. So demand out of China, especially tourism, hasn't recovered. And we're actually getting quite a little bit of deflation coming out of China on our traded goods, which is seen as good news, which it is. But then, like you say, our third largest trading partner, the United States, has just re-elected Trump. What does Trump coming back in mean? The honest answer is I don't know, but I'm an economist, so I'll give you an answer anyway. And that is basically these tariffs. They're going to be disruptive. And it just depends how severe they are. Do they put tariffs on us? We know they're putting quite severe tariffs on China. What does that mean? Well, it might actually mean that we get quite a few goods coming our way a lot cheaper, like EVs, for example, that may have gone to the United States. All of a sudden, there's a massive tariff on it, and they send them our way at a cheaper rate. So it could be deflationary. It could also be obviously inflationary with the prices going up on the back of these tariffs, and maybe there's some disruptions to trade on the back of this if there's a bit of a trade war that develops. It's really hard to tell how it plays out, and it's kind of like jumping at shadows. Trump says we'll put on a massive tariff, and then reality is he only puts on a small tariff later on. It's all part of his negotiating. So he's a very difficult person to read, but he is, somewhat consistent in the way he negotiates. He comes out with these massive calls, these massive, threats, and then sort of delivers something less.
Yeah, I mean, we get that in New Zealand politics too. Some people just kind of got it.
Yeah, score. Yeah, score.
Well, it's interesting what's happened in Argentina with all the reforms that have been going on there, and uh, the results so far for the economy and for the popularity of what's the governing party there seems to have it's working out for them. They're stripping a lot of costs out of the bureaucracy, and I guess that's what they're talking about doing in America too. And maybe America just goes on this run. If you got people that understand a balance sheet and a profit and loss statement, at the higher echelons of power now, maybe things fall apart and America loses its position to China, or maybe it goes the complete other way and America has another 50, 100 years of supreme power.
Yeah, I mean, that's the stance the market's taken, right? So in the lead up to the Trump victory, interest rates started to rise on the expectation of more growth, actually, tax cuts coming through, but also more inflation. So we saw, interest rates rising coming in, and then after he was elected, the US economy is actually performing quite well, particularly compared to us. It's performing really well. And it's unlikely, for that to, I think, be derailed in the near to medium term. To your point, there will be a lot of volatility and noise around Trump just being Trump. But at the end of the day, he is a Republican. He is pro growth, pro business. So that's the way the financial markets have read it, and we've seen, equity markets hit all-time highs. They haven't been spooked.
Yeah, yeah. I mean, I think they probably would have been more spooked if Trump didn't come in. So I guess that's reflective of that. And I do think about New Zealand's position where we do have a heavy, heavy reliance on government spending to prop up the economy, and that short term that can help, but long term you don't want the government to be half your economy. So it'll be interesting to see if National does get another turn in power, with the coalition they've got. Will they actually start reining in the government spending and allowing that money to stay in the hands of the small business owners that we have?
Well, they already have. I think one thing that's been quite noticeable is how much the national government has cut. You look at confidence and the Wellington kind of performance. It's really underperforming because of all these job losses and the approach that National has taken to downsizing the government. It has been quite noticeable, and in the economic numbers as well, right? So they have, I think, done a lot on that front.
Yeah, I guess it's relative, right? What they campaigned on doing and what they've actually done. Certainly some of the things I've been reading is not reflective of big changes. So I'll be interested to see whether the tune does, evolve closer to election time, because that will impact how the economy goes, is what we believe will happen in the next term. I'm certainly seeing a lot of stories about redundancies, around factory closures, around, there's been Solar Zero pulling, the funding pull out there, construction jobs, 11,000 losses. There's paper mills and plants closing around the place. Certainly, I'm worried about that. I don't.
Well, you're just describing the recession we've been through. It's been 2 years. We started seeing the data turning, in the second half of 2022, and that's when we put our hands up and said, "Hey, look, the Reserve Bank might do too much here," and I think they did, and we caused a little bit too much of a correction, too much economic scarring, which is still coming through, right? A lot of the stuff lags, and unfortunately, we don't see the unemployment rate peaking until, the second quarter of next year. And that's just because it takes time for that to sort of come through. But then equally, it takes time for it to feed the other way, over the second half of next year and into 2026, which is when we start expecting the opposite, right? Businesses to start hiring again and repairing. So yeah, it's an awkward period. It really is, and it's by RBNZ design.
Yeah, yeah. I mean, if you have to point fingers, there's a guy sitting at the top of RBNZ. So yeah, I mean, it's easier in hindsight to point a finger, but accountability where it's due. So things to get excited about next year: lower interest rates are predicted, business confidence, the trend is positive, and certainly we're kind of clawing our way out of this recession, and we're getting to a point where there is light at the end of the tunnel. And you guys have been adjusting your predictions as we go. Uh, you're predicting, I guess, another 50-point cut in February, and then just a smooth path down closer towards 3%.
Yeah, exactly. And I think the important piece in all of this is New Zealand's favorite asset, which is housing. It is, one of these things that you've just got to get your head around. And from our point of view, we see house prices rising 5 to 7% next year. And that's important for household confidence, and it's also important for small business confidence, because quite a few small business loans have a house as part of it, right? So when house prices are going up, that really does feed into household confidence and spending, but also business confidence and spending. And we've been through, like the economy, we've been through quite a correction in the housing market, which I think is sort of coming to an end.
Yep.
Now we've gone sideways for 18 months, but I think it's coming to an end. And we'll see activity picking up into next year, and we'll see people going from being sidelined and I'm not, I'm just not active in this market anymore, to stepping back in and having a play, particularly investors.
I appreciate those insights, Jared. We'll get you along again soon. If you guys have got any questions, leave them in the comments below, and don't forget to subscribe.
Financial freedom. Financial freedom.
Wealth HQ, empowering you to take charge of your financial life.